Good evening. I am Money Mike from the Manic Money Finance channel, and I today will be showing you the best set it and forget it stock portfolio for 2025. Not all others are like it, not all others are created equal, but I think this one is the best. I should preface this by saying this is more of a hands off. I'm going to toss money into these different derivatives, stocks, options, etc., and just kind of let it do its thing. Obviously, I'm all about dollar cost averaging, so I would say maybe go halvesies with this one and keep a lot of dry powder, in the old cantina, just in case something does dip. It happens. The markets themselves will probably keep dipping this year, but what I'm seeing is a divestment from the S&P 500 into smaller cap stocks like the ones I'm going to be talking about today. So obviously, I'm saying the S&P is probably not going to be good this year. We're going to see a lot more downside risk and potential. So without further ado, to probably just get into it. Unfortunately, I don't have, editors and a big production team, etc., etc. So what I'm going to do is I'm going to go through these things basically almost in order of importance. I kind of forgot Blackberry and Kodak when I was going through here. But I'm just going to cycle through a bunch of tabs and show you guys using Robinhood because I like their very basic yet informative breakdown of the important characteristics of stocks. So I'm just going to be sharing my screen here. We're going to go through this stuff. And, hopefully these stocks go up a lot this year. And, that way people can view me as an authority in the space. But anyways, my number one pick is going to be Zomedica. Many people probably don't know about this company, but it's like a clinical veterinarian commercialization of pharmaceutical, veterinary health company. They've been around for a while. As you can see, the price is 13.5 cents today, January 12th, 2025. And yeah, let's get into it. They have a high outstanding share value. They also have a pretty decent market cap of 129 million. So obviously, this is it's on the New York Stock Exchange, so they don't have to worry about that dollar minimum share price value. But as I scroll down through here, you'll see hedge funds. They're not really buying. Insiders are buying these things up. So that's usually what I view as the best sign for future growth. So, and you can see Robinhood does a good job of showing you the buys, who's buying it. The earnings, not great. Not great. They, are getting close to breaking even, but they've had, negative 2 cents a share, stuff like that. I think that, with the commercialization of their different products and, their stuff they're bringing to market now, we could see, especially that they're, partnered up with Merck on a couple things. You could really see this thing take off this year. I put this one as number one. You can only buy shares on Robinhood. There's no options. I don't know about other brokerages. I will mention how you can get certain things from other brokerages, mostly because I like derivatives. I like options and warrants. But with this one, it's so cheap. Just buy the shares. Just buy the shares. And like I said, you're taking half your money to jump in right away. I would put 10% of the portfolio on this, but not financial advice. This is just what I would do. So we're going to go into their SEC filings, of which they got a few. Their assets on hand are beautiful. You could probably see that down there. Their assets on hand, total assets, 214 million. Those did decrease about 15% from last year to this year, as they're really pushing, but they're to get stuff to market. But their liabilities are basically nothing. Nothing. They do not have debt. It is amazing. Their lease obligation for their physical location, the physical headquarters, that's their biggest. That's probably their biggest expense. Besides payroll, of course, and accounts payable. This is from the most recently quarterly statement. So as you can see, it was a net loss of 1 cent per share. You know, the 9 months ended September, it was a net loss of 4 cents per share. That's really nothing. Um, you know, they are making money. It's not a ton. You know, 5 million. It's growing though. So that's why I think this one is going to be getting a pop. So obviously, I know some of these stocks aren't going to have the fundamentals, the earnings per share, the PE ratio to really justify a lot of people buying them, especially hedge funds. But this thing ran to $2.50 not too long ago, and we're going to see a cycle away from these large cap stocks that are severely overvalued into smaller cap stocks, equity, more speculative assets and equities, and we're already seeing it. So, I mean, in that part, I was definitely right. So, there's a lot of beneficial ownership. People in the company are buying these shares, buying these warrants, just like this guy right here, Jordan Scott, brand new chief financial officer. Guy knows what he's doing. He's got a ton of experience. And I think that he can really help them move forward. This company wanted to do a reverse split because no hedgies own them, hedge funds. The shareholders decided to say no, and they voted against it. So I'm reaching about the limit of my. But he bought. He was awarded 5 million warrants or options to buy common stock, and he'll have to buy the common stock if he wants it. So this is one to keep an eye on. If this guy actually buys, as you know, insiders are the ones buying up most of these shares. So the next one is QS, QuantumScape. I was already checking out the options before. I forgot about that. So QuantumScape is an interesting company that they don't have anything brought to market yet. They're not selling anything yet. So this CEO Singh, I mean, he's basically he's got a bunch of patents because he supposedly has come up with a revolutionary battery technology. So this one has a big question mark. I've noticed, some weird things happening with the shares being bought and sold and everything else. But what can you do? I think the leadership is mostly Sikh, Indian Sikh. They're very cool dudes. You'll see him on CNBC sometimes and stuff. And, seems trustworthy. We'll see. You see the Robinhood trading trends. Some hedge funds have sold this year, but it seems like more have bought than sold. Not by a lot. But what's interesting to me is that the insiders, while there are some selling, there's more buying going on than selling. So that's another good thing, Earnings are negative, of course. They haven't brought anything to market yet. But eventually when they do, that's going to be a thing. Once they bring a product to market, they supposedly have a small cell battery, solid state lithium, that can produce power at higher outputs than anything on the market right now. So if they manage to come through with that, you could see this thing go insane. And what I like for stocks like this to have options is to do a spread of different options and shares. Do some shares, some options, and then sometimes what I'll do too is I'll buy puts too to basically, hedge any possible loss. So what I would do with this stock is I would probably go, 60-70% shares. Then I would buy some of these calls here. I'd usually buy some $5 calls and then some $7 calls because let's face it, the price difference between the $12 and the $7 calls is not great. But obviously something to keep an eye on. If you see them dip, buy them. And then I would also buy puts. And I'd probably buy them for a shorter time frame, like May. I'd buy some puts, maybe some $5 puts, maybe even some $4 puts. Because up until May, if the stock price does manage to tank, you can make your money back, possibly offset your loss, or at least, make it sting a little bit less. So QuantumScape is great. It's a lower price. Obviously, they have a ton of buys and sells of insiders of shares. So I noticed some weird stuff going on with that. I mean, the assets is not great. They really have nothing going on. They do have a lot of marketable securities, though. I'm sorry. The assets are great. They're in the billions. 1.5 billion in assets. Liabilities, liabilities, a fraction of that. So that's good. It's a nice balance sheet. All right. So what we're seeing here is Fidelity Brokerage. Um, you know, so this is them just selling stock options. So it's kind of interesting. These were sold to, Mohit Singh, which I think is the COO of QuantumScape. But they definitely have a lot of options that vest that their CEOs and executives are selling, exercising and then selling. This is an example of that. So this is him, acquiring stock through options at a cheap price and selling at 6.15. So yes, they are using this to enrich themselves, but they're not doing it like he still has quite a few shares left. So they're not doing it like they're not as bad as Palantir at the moment, for instance, where they're just enriching themselves ridiculously through the sale of stock. But I think because of what's going on with this one, the battery tech, I think this one could be huge, even with a petroleum-centric government that's coming in. So, on to the next. So, I'm going to try to go as quick as I can. I want us to only spend about 5 minutes per stock so we can condense this and get this in less than an hour, while also giving you some good information on it. I could just be like one of those, stock bro, moon boy types that just, boom, this stock, and then 30 seconds of info and not really give you a good idea of balance sheets, stuff like that. So obviously that's not what I want to do. So D-Wave Quantum, another good one. This one is into quantum computing. They have tens of millions of dollars in contracts for this year coming up, signed up. They're working with the government. They're working with IBM. They're working with a bunch of big players. Quantum computing, I believe, is going to be our next big super cycle, and it's probably going to drag chip makers in with it once again. No matter what it is, AI, quantum computing, the chip makers are going to be there, and we will be talking about that too, because I have one very controversial pick for a chip maker. But as you can see, this stock's already on the way up, so it dipped like everything else did in January. So I see this as an amazing buy opportunity. Obviously, this thing is just going to keep taking off. They do have a working quantum computer, so it's pretty nice. And like I said, options. I love the options. I'll go to 2027, hold these things for longer than a year. First 40 grand, basically free, no taxes. So the prices on these options is off because of market close and everything. Obviously, it'd have to be a live trading day to see the correct prices of these options. But I'm a type of person. What I like to do is I like to get some options either barely in the money or just out of the money. Do like 66% of those, and then the 33% I will go for something crazy, like this one here. That's how I've gotten 10-time gains before. And yeah, I mean, you could also buy stock and you can sell these options, and the premium's beautiful. If I could buy this stock and sell these options tomorrow, get $85 a contract, that would be a nice premium. I'd bring my cost basis way down. And yeah, so I mean, I will have a video coming out soon, probably February, about options and how they work. That one's going to be a little more complicated. It might be a two-parter because options are pretty complicated. But D-Wave Quantum, not a lot of crazy stuff going on in their balance sheet. They do have a lot of press releases, a lot of 8Ks. That's the press releases. So, and they're this is probably how I would invest 25% of what I was going to be putting into this. I would be putting into these warrants. So warrants you can only get on your traditional brokerages like Charles Schwab, stuff like that. I mean, Webull might have them. Webull seems to have everything somehow. But you're going to have to go to something like that. Robinhood's not going to have these warrants. So these warrants exercise at $11.50. That $11.50 a share. That's beautiful to me. And I'm probably going to leave this window up so as a reminder so I can check these bad boys out. So if this thing does do something crazy, like go to $20 a share this year, those warrants, which are probably worth less than $1 now, will be worth, $850 per warrant. Wild. Apparently, I have two of those windows open. So, and then what is this? So this is an ATM. So this shows either ATM. They have an ATM, which is basically at the market. It is kind of like an ATM too, because they basically can make money off this. They just sell securities. So they are. Oh, this is a merger consideration. Ooh, that might be interesting to approximate date of sale. Ooh, merger consideration. That's interesting. That's something to keep an eye on, because mergers tend to really, they buy the stock at a premium, and Oh, this is a guy. Public Sector Pension Investment Board is buying these. Yeah, so I mean they have a lot of good things going on, you know. I'm thinking now might actually be a time, because at this point, I would say those are definitely my top three. But my next one's gonna be Blackberry. Obviously Blackberry's already been running a little bit. I made a bunch of money on this thing at the end of December after earnings. But if you look at the 5-year chart here, they could return to those. Market cap's pretty decent. They're not issuing a ton of shares. They know that'll destroy the price of the stock. Hedge funds are buying in. Insiders are buying in. It looks good. Earnings are going up, and they finally had a profitable quarter. They've had a couple now, but they had another profitable quarter. They're in the money completely now with just their cybersecurity business and all their tech business. This company made a transition from selling phones to basically doing emergency communications and cybersecurity and connectivity type products. They have suites of software. They don't really deal in hardware. It's mostly software. So they're coding. They're an emergent software vendor, like it says in the article. These guys are coding, and they're coding their butts off. So it just goes to show that a company like Blackberry that's been around for a very long time can adapt and overcome the current market sentiment, etc. The changes in the market. So this one, obviously, I would probably go all options. If I bought shares, I wouldn't be able to keep myself from selling options contracts. I would go super long term with this bad boy. I'd probably be looking at the $4 calls, and then maybe the 550 to 7 range for January 2025. That's just me, not financial advice. You can always just buy shares too. I think shares could easily double on the stock this year, as long as they keep the trajectory that they have going on right now. It could be pretty spectacular. I'm probably not going to talk too much about this one, because I cover this one on the live streams constantly. You can always get more info on our live stream. So the next one, and I know what you're thinking. Kodak, what is this? 1999, Blackberry, then Kodak. The Kodak is doing the same thing. They're getting into the chemicals business. It's advanced materials and chemicals. They could be selling reagents, different things for pharmaceuticals. It could be a whole array of different things, and they have already transitioned over. They're making money doing it. See if they, hedges are buying, insiders are buying. The profit, they have positive earnings per share doing this too. And the biggest caveat that I feel like I have to mention, anybody that's been following Kodak knows this, that Kodak has a giant self-managed pension fund that they've switched over to another company to manage. There's a massive overage, $1 to $2 billion now. Nobody knows the exact figure anymore, but it was $1.2 billion early last year, and they've been keeping pretty quiet about it. So this company, whose market cap is $500 million, has an extra 1.2 at least billion that they can access after doing everything necessary. But their employees don't need that money. Their pensions are good. They have an extra 1.2 billion, which means that's 1.2 billion in cash they're immediately going to use to pay off debt. They could do a stock buyback. Nobody knows what they're going to do. They haven't told anybody yet. But with a market cap of 500 million, this is an easy double. Easy double. Should be $20 a share right now, Kodak. So, heard it here first. All right, now we're going to go back. We're going to be talking. This one's going to tie into probably QuantumScape. So, my next play, I have this stock up, but I wouldn't necessarily say that this stock is my next play. I think I would do, a little bit of a spread on the lithium, mostly to try to encapsulate the increase in the commodity price, which is bound to happen. So lithium has been cratering for a couple of years. It went down even more the end of this year. We're just at rock bottom prices where it was before the electric vehicle boom. So, which is interesting because everything that has a battery nowadays has lithium. It's actually the best way to go is rechargeable lithium batteries for the environment. At the moment, that's the best we got. They're highly recyclable. Regardless of what people will say on social media when they start bashing Tesla, these batteries are 95% recyclable. So it's I think lithium's going to be a good play. Obviously, Lithium Americas, they're the ones managing that giant lithium deposit that was found in Nevada. Go America. But I like these 2027 calls. They're cheap. If lithium rockets again, I mean, these things, it will be absolutely insane. I think lithium's going to go up. And, when the commodities go up, these stocks go up. So, which is interesting. We're going to check out. Hedgies, insiders have actually sold, which is not good. But, this one's battered. The fair value is supposed to be $8 a share. Their earnings per share has dropped from positive to negative. So this is kind of like a bottom play. Just like lithium. And you don't have to invest in this. You can buy the commodity directly. You can get into some futures action, stuff like that. This is what's happening with lithium by the price. So as you can see, because China is basically refining the majority of the lithium in this country, this is what you're seeing, man. This is all from China. The dollar amount is in China, Chinese yuan, and they're mining it all over Brazil, America, a bunch of different places, but the market is really in China, and so that means it could be rife with manipulation, because the Chinese like to do that stuff, and who can blame them? We're all trying to make some money. No money, no honey, and so. These ones here, I mean, you never know what we could get here. I don't think, obviously this is a multi-year rise and drop. So it'll probably take, excuse me. Excuse me. Sorry about that. Come on. Bark. All right, my dog's a little crazy. But yeah, so lithium going up. It can't stay this low forever. Just the cost of mining and everything. Yeah, it'd be interesting to see. And if you don't like Lithium Americas, which didn't even make it onto this list, this is U.S. News top lithium picks for this year. So, I mean, some of these probably aren't listed on the American stock markets. Some are OTC. But I liked Arcadian Lithium. They were looking real good. They were still making money with cheap lithium, mining it. But then they got into a merger deal, and now they're probably going to be gone. But whatever company they become, I'll probably jump into that one. But that was my Arcadium Lithium was my top pick before they signed the merger deal. So, biotech. Oh, good old biotech. Battered, beaten down biotech. That has just suffered and suffered. The past 4 years. It was rocketing under Trump, and we're not getting political. We're just stating the facts. And now these highly speculative assets have just tanked, ruining people who go heavy in biotech. So, it's rough. So, my biotech picks, I'm not really going to be, I don't really want to pick a favorite, but I like this one only because of their potential. I mean, they've been through some reverse splits. As you can see, their shares back in 2021, 12,474,000. And this one has been just epically destroyed. It's not good, even from just a year ago. So, basically, this is another bottom play. We have, negative earnings per share coming out. A really bad sentiment on these ones right now. So they're probably not going to be issuing any shares. Tiny market cap of 4.5 million. They're not going to be issuing any shares, but they're getting very close to a commercialization of an ovarian cancer drug. FDA approval. I mean, this one could be the best or worst of the portfolio. This could This could go through the absolute roof. It's insane to think about. I mean, they could just sell off. They could just do a buyout because at this point, another reverse split would probably ruin all sentiment, which is already bad enough in this stock. So, it's an interesting one. They have very few employees, so they're running real lean, and they know that if they do another offering, this thing's going under the NASDAQ minimum price requirement, and so they're avoiding that. They're working with a couple of bigger pharmaceutical companies to commercialize and market their stuff. But what is this? I'm on NASDAQ. Don't be giving me ads. NASDAQ. We got some SEC filings here. So this right here is, their patent, European patent they were granted. For their ovarian cancer drug. They got a lot of those, a lot of 8Ks, a lot of press release, phase 2 study for the ovarian cancer. And as I told you, it's not great. Balance sheet is not great. They have a lot more money now than they did last year, which is good. I don't know, where that came from. If it was stock sales or what, but it's not fantastic, and their net loss is also pretty bad. So, I mean, this one is probably more of a risky play, but I kind of believe in them. Like I said before, FDA approval, really even just announcement of a partnership with a bigger company. I mean, there's a lot of little things that could really send this one off. I think this one has some insane potential with an FDA approval. But when I was going through a lot of different biotechs, because obviously I haven't been, I probably should put a disclaimer, I haven't been following biotechs all that much due to the nature of the markets the past 4 years, but I'm jumping back into it now, and this is one of the ones that I've found thus far that I really like. I do have some honorable mentions at the end of this video, and there's a bunch of biotechs in there. So, next one, Bitcoin Depot. So these guys are a Bitcoin adjacent, cryptocurrency adjacent company, and if you watch the live streams, you know that we are still very much bullish on crypto into this new year of 2025. I think we haven't hit our all-time high on this cycle yet. Due to how difficult it is to mine these things now. And not only that, the sentiment is insanely good around cryptocurrency. Everybody's forgotten about FTX now, but I digress. This is not a cryptocurrency company, really. It's not a miner or anything like that. It does Bitcoin ATMs. So it allows you to convert cash into cryptocurrency. It's also offering payments and everything else, investing, so, maybe able to make payments in cryptocurrency, stuff like that. The hedge funds have been kind of iffy on this one. Some of the hedge funds sold off because these guys did a reverse SPAC merger to get listed just last year. Some of the hedge funds sold off their shares. Not a a ton, 4 million shares. Not a big deal. Our big guy there, the CEO, he sold off a bunch of shares right after they got listed, but he hasn't really sold much since then. You'll see small sales, obviously. So, but it's not a ton of transactions. It's not a huge value. And right now, there's no incentive for them to keep selling because it's rock bottom prices. Why? Why? I mean, this company is doing hundreds of $1 million in revenue every quarter. Obviously, they're at a loss, but their earnings per share has been cranking up. So I think this is the best time to buy into them. Their earnings per share is going up. They're going to be a profitable company very soon. I think that March 24th earnings is going to be a positive surprise. I think it's going to be positive. Nobody's going to know what to do. It's going to be at a time when Bitcoin's probably still going up and over 100K. So that's kind of the caveat with this. This one, you really need Bitcoin to go over 100K for this one to really be a solid buy. I mean, without that, basically you could see a slow climb up due to the conventional measures that we use, but being Bitcoin adjacent and being called Bitcoin Depot, if Bitcoin goes to 125K, 150K or beyond, this thing's gonna go through the roof. So, and obviously, here's their financials. Assets, not so great, but good. Unfortunately, their total liabilities outpaces the assets at the moment. And with stockholder equity, this company for the last quarter not looking good due to the fact that they weren't earning. It was negative. So, and revenue, the loss per share, as you can see, has been getting better and better every single time, every single quarter. So, just something to keep an eye on. Let's see, I went into this to show you something. Selling shares, not a ton of shares. This is the CEO, Mints, and same thing with this. Tiny little cells, nothing crazy. But I would say with this one that it's okay to go less than 10% because I am right now. I'm not putting 10% into this one. The shares are pretty steady, pretty solid right now, the share price, which is surprising. So it might be, kind of a resilient place to put your money. But what I like are these warrants, these Bitcoin Depot warrants. They have an exercise price of around $11 a share. I don't know if it was 10 and change or 11.50, but it was right around what they got listed at, and they got listed at for $10 a share. So basically, these warrants right now are so freaking cheap. Remember, this is the price of the warrant, not the price of the stock. Since it's the inception of the warrants. So that's this one right here. These warrants, they're super cheap. So if you put some money into it, even just a little bit of your portfolio, 1/4%, 0.5%, 1%, and nothing happens with them, so be it. I mean, they expire in 2027, I believe. So you got a long time till these things expire. If Bitcoin does go nuts, and I've talked about this on the channel a lot, and these go through the roof, if Bitcoin goes nuts and Bitcoin Depot goes through the roof, these things will be an insane return on investment. And I will be writing down all the stocks that I talk about and their prices right now, so then people can. I'm going to basically put together, and I'm going to post it on our social medias, my exact portfolio holdings and the percentages of them within the, as I post this video, basically. All right, so chips. Talking about the quantum computer super cycle for 2025. You can't do that without chips. And right now, I see NVIDIA, I see all these, Taiwan Semiconductor, I see a lot of these chip companies, and they're doing really well, and they'll probably continue to do well. But I just don't see the income potential as much as the battered and beaten down Intel Corp. So Intel, a lot of people know, but Intel had a nice bump from the CHIPS Act, but then they had an issue with their chips. Everything's been fixed in the software end. There were some degradation issues with the actual chips themselves, a very small amount of chips. But then there was a problem with the chips when they were getting fried out in people's PCs. And that was mostly because their PCs were running these chips at such a high temperature, high performance rate that they were burning them out. And I don't know what if it was Intel wasn't ready for something like this, or they didn't adapt quick enough. Well, I have an Intel chip in my most recent build, and I just made sure that I went on Asus and downloaded the drivers that allow this chip to function without degradation. And thus far, my computer's been incredible. I'm playing brand new games, highest graphic function, while streaming to a bunch of different platforms at once. Gaming and streaming at the same time. Streaming my gaming. And I've had absolutely zero issues, knock on wood. So I just don't, the fix is in, but this thing is just not doing good at all. So this is a nice bottom play. I think it's ready for a comeback without a doubt. Robinhood sentiment's all right. Hedge funds are kind of selling. Insiders are buying. The earnings are not. Earnings have dropped, and they actually had a negative earnings last quarter. But we're looking at 12 cents a share for this next quarter here, and that's coming in mid-January or the end of January. So I'll definitely be playing that earnings play. And I will definitely be getting into the options on this bad boy because with everything going on, these options are cheap. Very, very cheap. So, not that cheap. So, you can always do January 2027, January 2026. Obviously, you're going to want to be looking at time. But, if you look at these guys, man, if that thing bounces back up to $50, $60 a share again, you could be looking at insane profit. And I think at this point, it's just the sentiment's bad. There's not a lot of hype around them, so they're not doing well. They got their SEC filings. They do a breakdown of their income in a weird way. EPS. The EPS for quarter 3 was bad. So this is why you're seeing such a low share price, which is pretty crazy, especially on decent net revenue, decent gross margin. So yeah, it's really just coming down to the Intel chip issue, and people are afraid to buy this now. Total assets is great. Liabilities is minimal. They have very little to no debt, which is insane. So they've kind of positioned themselves, and they hired this guy, and they hired a new director. So two new directors, and these guys have decades of experience in the chip space. So basically, Intel is seeing that, hey, we have a problem, and they're hiring the right guys that they need to get the job done and get a turnaround on the stock. So I think rock bottom play, value play, it's perfect. So, unfortunately, I missed the top on this one because I was talking about this one for a long time. So this company, Palantir, they really benefited from the AI boom, and they shot up to an absolutely insane market cap, insane share price. It's just there's no justification for it, I believe. Market cap 153 billion. Yes, they got listed on the S&P 500, so I can understand, why the sentiment's good, why the price keeps going up. But if you see hedge funds who were buying, they're now starting to sell. Insiders, forget about it. They're dumping shares. They know that their stock's not worth, $80 a share, let alone 70. They sold a total of 30 million shares just in the last 3 months. Absolutely insane. And their earnings growth is not fantastic I mean, it's decent. They're going keep going positive, but they're hiring so many people that I do not believe that this stock is going to do well in 2025. Um, the whole thing with AI is starting to die off. People are want to see quantum computing now. There's other stuff too, like with when it comes to a market with lower interest rates, the speculative assets, the small caps, just tend to do better. And like I said, there's no justification. Robinhood usually puts a fair value for stocks, $21. So this is my only short sell. So I'd be buying puts. I wouldn't even go super long term with them too because they're too expensive. Maybe October 17th puts. You know, um, obviously these are going to be kind of expensive too because everybody else is thinking the same thing. But you can also just short sell this through literally every single brokerage due to the fact that they're on the S&P 500. Now, I believe that was number 10. I could be wrong. I think I hit 10. I don't know. I gave you a ton of information. And now I'm on to the honorable mentions. And this one might not be an honorable mention. This one might actually be 10. So, I mean, BioKey, these are biometrics. So, this is all stuff that you use to safeguard sensitive locations. So they have retina scanner, fingerprint biometric. They deal with hardware too. This isn't just software stuff. They actually make those little futuristic looking panels that you hold your palm on and it opens the door. So, this is becoming more and more of a thing. Insiders are buying. Hedgies ain't even touching this one just because it's so small. So earnings are still negative, but they're heading in the right direction. And they're selling a product. They have more and more products coming to the table. So, and this one's already on a turnaround. It doesn't move too quick. Not a ton of volatility. They dropped down under the dollar minimum this fall, but they're already back up above it. And I mean, that chart looks like it's going somewhere. So, GoPro is another bottom play of mine. Completely unfounded. I've just been kind of watching this one, and I think that we're getting to a point now where GoPros are so cheap and the video quality is decent. That people aren't people who need GoPros aren't going to keep relying on their phones. So, it's the phones are good, but you drop and break a phone, that's $1,000. $150 GoPro, not as big of a deal. And they're getting into 360 cameras. You just keep going. So, this one is an honorable mention. Obviously, I might not even buy it, but I just like it for a bottom play. I do not think GoPro is dead. They could also, they could also get a buyout. Now we got a couple biotechs. This is a bottom play biotech, Allarity Therapeutics. So this is breast cancer. So they're oncology. They have a lot of good things going for them. So it's interesting that they are so battered up. The earnings per share, like I said, negative. That's why this is just an honorable mention. Maybe put a little tiny chunk into it if you feel like it. This one is a lot better of a pick, I think. Medicinova. So they basically go around and they find clinical trials where small companies that can't afford to keep going basically are working on novel treatments for novel diseases. So they're trying to get some unmet needs going here. They're trying to come up with a new breakthrough type medication. The board of this company is just a bunch of heavy hitters. So this looks like a decent one. Probably better than Allarity for sure. Who knows? They might end up buying Allarity. But if you see by the 5-year chart, they've just been slammed, and I don't think there's any justification for that. Small market cap, 96 million. Earnings, like I said, not great, but going up. Oh yeah, last honorable mention. So that concludes our top 10 for 2025. I say this is a set it and forget it portfolio. I know some of the picks that I have, people are gonna be raising an eyebrow. Like, what is this guy? This guy obviously doesn't know anything. I am lifetime positive by far, trading and investing. I would have to lose a lot of money to get down to being a losing investor. So I do know some things. I have 8 years under my belt following this stuff almost every day. There's been times when life was busy, but this is I believe this is a good portfolio. I believe, given the market conditions, market sentiment, and I also think that it's a little more recession resilient or correction resilient, because it's looking like we're in a correction pattern with the S&P and the broader markets in general. So yeah, it's just something to keep in mind. I know I kind of ran through these real quick. I was trying to just spend 5 minutes a piece. I don't wanna make an hour, 2 hour long video. But obviously, you're gonna have to watch the live stream to if you want to know day-to-day, weekly plays, stuff like that. My short-term stuff, I'm not gonna talk about on here. This is your set it and forget it portfolio, diversified across a bunch of different sectors. So basically, the goal with this portfolio is just double your money this year. Some people they think that, man, that's crazy. But for me, the double your money thing isn't really that crazy with a portfolio, especially if you only have 10 different things you're doing. And like I said, half your money aside, dry powder aside. So if stuff does dip, you can average down, and when it goes back up, you'll be making double your money. And that concludes the video. I hope you learned some things. I know it's not very flashy. I don't have any editors and stuff. Just doing a one shot for you guys. That's it. So, stay frosty, my friends.